The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everyone, to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. As every day we come, and once more into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
Yes, it does every day. 2076 on the S&P cash. We're off 22, and let's call it 23 points on the S&P cash, 2.2 billion shares. So volume's good, but not as good as last week. Starting to see some interesting developments. Of course, we were down to 2068 as a low today on the S&P cash. So could we go much farther? Option market makers are saying a little farther down, maybe 2050 on the S&P cash before it sinks in, but we'll have to see. Of course, we go into the options expiration cycle on Wednesday. And again, we get back into a problem where it's going to be very tough, I suspect, after the next few days to really get a push down. I suspect that push down will come from the retail sector, though, so we'll get a little bit more of that. We got a few other things going on here today, but probably the most important thing is to get started.
And it's all just a little bit of history repeating.
They've got to always try to get that in there. Anyway, on this day in 1938, an event that would foreshadow the Holocaust, German Nazis launched a campaign of terror against Jewish people and their homes and businesses in Germany and Austria. It was called Kristallnacht, or the Night of the Broken Glass. They smashed the windows of Jewish-owned establishment, left approximately 100 Jews dead, 7,500 Jews businesses damaged, and hundreds of synagogues, sent many of them to concentration camps. And it's kind of the start of what would happen. And I think that was actually not 1938. Why is that on there? That's I don't think it's 1938. I thought it was 1933. Maybe I put it in there wrong. Anyway, it was on this day. And kind of watching the weekend news where people run around out of the blue and just stab people. Seems to me like I said before, very little new in this world, and everything continues to change. Very little. But on this day in 1938, a foreshadowing of some of the worst parts of human existence, and of course the defining event of the 20th century. Sunday night, actually, there was on the lighter side of things, when a lot of these super evil people in the .com world aren't being truly evil. They are throwing cash around. They gave away $21 million on Sunday night on something called the Breakthrough Prizes. If you haven't heard about this, the founders of both Facebook and Google give away this money every single year, and 5 scientists, 1 mathematician, and a ton of other physicists walked off the stage with 21 million shares, including 400,000 shares to a high schooler who made a video on quantum physics. But occasionally those guys, probably the most awkward thing, if you watched it on National Geographic, was the 23andMe founder, who used to be the ex-wife, or is the ex-wife, of the Google founder. And they had to stand next to each other like nothing was going on. So kind of interesting. Other things of interest out here, of course, Priceline was down. We're going to get into that. I particularly was thinking fairly bearish in this particular sector. And, of course, we saw that in was it Trip Advisors? We've seen it, of course, in Priceline today. Expedia was the first to really come out, and they had a kind of a little bounce out there, but mostly it was because they were buying other companies. Now that we have a couple more pure play issues through the line, like Priceline, which was down $135, maybe a little bit more today. We'll look at the chart a little longer. This one was one of the fastballs going right down the center of the plate. The downside was that it was a $1,400 and some odd dollar stock, so it didn't make any sense to actually play it from shorting the equity. And also, the problem was if you went and looked at the options, they were telling you that you had to get through about $75 just to break even on them. And that told me that everybody was already looking for a ton of downside in that sector. I saw it. It's not all the time, but there's many times you'll actually know exactly what's going to happen in a stock, or you think you're going to know. And you'll look around, try to find maybe something else in that sector to play with it, just because literally there's no way to win on the thing. You could have bought the equity and it would have been okay, but I'm not buying for a 10% down move. If I could have bought the options and maybe made 50 or 100%, maybe that would have been something to do. But sometimes you can know everything and it just never pays off. Speaking of knowing everything, the one and only Andrew Heck, the brain of course, commodities here at TFNN, wrote an interesting article, and I was talking to him before the around noon today. And of course, if you actually write anything that somebody like a trader should actually read, it's probably the least read of all his articles. I would recommend that you take a look at it, but it's never one thing. But the idea is of his article is, what are we looking at? Inflation, deflation, stagflation? And he's got some arguments. I'm not telling you the way to think. I would recommend you read the article. I'll post the link in the den. But one of the things that you should think about, I think, more than anything, probably between now and the end of the year, is start looking at the macro ideas and macro trends in this market. I think a lot of people are telling people just about anything, and you could have made a bet on all three. But I think we're now getting the real, or getting down to the real part of where the actual way this market is going to play out is going to be very plain. It's not going to be vague or ethereal. Once we start raising rates, what will happen is everything will start coming back in line, and very clearly we'll see, as Mr. Buffett says, who was out there swimming with no bathing suit when the tide went out. But I'll put that link in the den. You can always email me at path@tfnn.com. Several people did on Friday, and unfortunately, for whatever reason, I got the email about 5 minutes after the show was over. We'll try to answer those questions today also. You can, of course, add additional ones at path@tfnn.com, or you can give me a call at 877-927-6648. Well, that gets us pretty much through all of that. Now it's time to start looking at some charts. And, of course, why don't we start off out here with Priceline. Yeah, that's the last one out here. This one had actually made a pretty good indication that it was setting up to go lower. Let's see what I've got out here. Oh, there. Okay. What I didn't like about Priceline was a big problem, and this is the pattern we were talking about on Friday, and that is these breakouts with no volume and pulling right back into the trading range. Certainly, Priceline was running way ahead of where it probably should be. The volume and energy didn't really increase as it went back up to the highs. But, of course, if there is a sector that is going to have problems because of a strong dollar, in any of those sectors, most likely that sector is going to be around the dollar. And there's nothing more subject, of course, to a strong dollar than travel, especially if you're talking about Europeans coming here to the United States. Priceline itself doesn't make that much money off of airline tickets. What it does make a lot of money off of is rental cars and hotels and other things that they sell along with your trip and itinerary. The problem with that is now hotels will be vastly more expensive or less expensive depending on which way they go. But it really, when the exchange rates are set for a while, most people climb to it and really don't make their travel plans change because of it. But I think the very strong dollar here is going to change a lot of people's travel plans going one way and probably not increase it that much farther the other way. And they agree with me. Like I said, we were in the daily news that we've been looking at this sector for a while. I just didn't find a very easy way to play this thing. But it looked to me like both the option market makers and the volume on this thing, it broke the previous high, never saw any volume come in, and of course, we're right back down. Now, we talked about Facebook last week. I said I would not be surprised to see it come right back into its trading range. And to me, this is not much of a change out here. In fact, you could kind of make this thing as a Gartley pattern if you wanted. But it's not going to work. But it's kind of stretched to actually do that. You went up to the September 21st a little bit too high. But you've got kind of that pattern out here, and this 110.65 looks like it could be a kind of a little reversal signal. You didn't give it all back in one day. I'm not saying Facebook falls off the side of the planet, but I'm thinking a great deal of these stocks over the next weeks and probably into the end of the year probably come back into their trading ranges. One of the reasons why is the way that options are actually trending today. That was pretty much through about 12:30. Option market makers had been playing this move today as a move that would have been reversed by now. That is, that they were selling huge amounts of puts for downside protection, but giving them away with a premium that suggested there wasn't a lot of downside. Now, they may be thinking we'll get into Wednesday, make a low, and then that's it, and continue. But it continues to make me think that maybe there's a little bit more downside than they even thought, because premiums, like I said, probably since about 11:30 have been gaining strength in the S&P. That means that maybe they think there is a little bit more downside than most people, and even them, thought earlier this morning. We will be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I have a special shout out to someone who emailed me over the weekend.
I find your lack of faith disturbing.
You know who you are. Anyway. What else we have going on? Oh, we were looking at Priceline. Anyway, just thinking that we've got a lot of these stocks that are breaking out. I'm going to come right back into the trading range. There's not a great deal of stocks that are giving a lot of signals, and probably at least the one that made me think that holding short over the weekend was not a bad idea was the IWM. This made a fairly decent signal in the first time for a while. In that the energy on the way down to the way up was lighter. And, of course, it did test on Friday the previous high of September 17th. It had 50 million shares. With this 35 million shares, we've got a nice reversal back in here today. Volume is not real big so far. But, you know, we were off about 18% on the energy coming from that September 17th high down to the September 29th low, back up to this high. So I think you can probably make a good case that at best we have a trading range. But of course, we're running out of time this year to actually get very far into, you know, and after Thanksgiving, it is very hard to get a real bear run going. My guess is that if we sell, we're going to sell off pretty much on retail stocks this week. And then that's probably going to be about it. Anyway, as I said, you can give me a call at 877-927-6648. Let's try to get our email wrapped up from Friday. What are my feelings on FireEye and GoPro? Well, I talked a great deal about FireEye on Friday. So let's just take a look at GoPro real quick and see if there's anything else. For me, GoPro probably is flat or minorly flat out here until the end of the year. There are some, we talked about tax selling, and this is one of these stocks that looks to me like, could it have a bounce? The answer is yes, and the bounce will probably come when tax selling is over on it. Depends on exactly who the customer is, but if it's a big hedge fund or a big street name or even retail investor stuck with this dog with fleas, that it is going to be problematic to see this thing bounce until we get probably around December, when people that are selling their stocks or their dogs to make up for the stocks that have done well and they've already sold so they don't have to pay taxes this year are over. But I would say GoPro is probably a good indication of a stock that's going nowhere as people sell into it probably through the rest of at least November. At those points, sometimes, especially with highly short stocks, you can see those things run into the last couple of weeks of the year. If you were thinking of playing GoPro, I think that's the only scenario right now that makes sense to me. So I got one there. Goldman Sachs. Let's take a quick look at this. Question is from Jamie in Green Bay. With Fed now likely to raise rates, the financials are going to the moon. Is it too late to get on the GS train? And to me, I don't see a lot out here in Goldman Sachs other than a fairly decent recovery. I mean, you had some decent volume on Friday, but certainly you still can look at the volume down days that it went through with 5.4 million shares. You had 4.2 million shares on Friday. I think you're probably looking around this $200 range, but I'm not expecting a great deal out of Goldman Sachs either. I think pretty much everything is in there. And what everybody's telling us, of course, the financials going higher, I don't suspect they do. One of the reasons why, and I covered it in, I think, the Tech Insider today, was something that I saw Friday night, a bit of, and then I went and hunted it down over the weekend. But that was an interview with the largest container shipping company in the world. And every time you see one of these big container ship, you'll see Marsac on the containers and on the side of the ships. This is the company I speak of. But very interesting interview with the CEO of the company and CFO and some of the other people around. But there's probably, other than people that make packaging, so you know what your customer is building and how well he's doing over time, there's probably not a better lightning rod for how world economics is doing than finished products moving around in these container shipping. And they are basically saying everybody is vastly overestimating how well international trade is doing now. I think we saw that in our trade numbers last week. But I think it's going to probably take a little while for the market to realize it. But I'm thinking we've got some downside here, but the real downside probably coming after the first of the year. We'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio and hedge against the falling stock market, consider the new market-safe Metals Hedge CD from Everbank. This 5-year indexed U.S. dollar-denominated CD gives you exposure to metals with gold and silver components and allows you to hedge against falling equities with a short component on the SPY ETF. You can earn up to 45% capped upside payment at maturity if gold and silver increase in value and the SPY ETF decreases across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Don't let fallen markets get you down. Get the Metals Hedge CD. The November 12th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This is sponsored content. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And Alcoa is off a bit today, down on fairly significant volume. Looks like we're going to get close to that 41 million shares we saw on August 24th. That had 41 million shares. We've got 27. Can we get to the 41? Probably going to be a little tough, but I think we're going to be close. It's not going to be that far out. And Apache Corporation, of course, saying that they had an offer to buy out. Of course, this is with crude, looking very crude today, off 45 cents at 43.84. But nice little doji out here, too. You'd have to watch this thing out here to see whether or not it gaps back down tomorrow. It's kind of hard for me to see people paying up in a market that looks like we've probably got a year of lower energy prices coming. It's kind of hard to see that anything turns around anytime soon. Of course, other things that are flat as a pancake, gold up $1.70. Boy, just hanging out there. Anyway, be very careful if you're trading gold. That is my warning here. I, of course, am hoping that I can get it a lot lower. I know many people are thinking that it takes off right now. Other things we've got going on in here. Anyway, on Apache, nice volume, nice little doji out here. And, of course, the rumored buyout that may or may not be real. Other stocks that are getting hammered on earnings, Comscope Holding Company, COMM, it's down on monstrous volume. It has pierced the previous low of August 24th. It has done so with a volume out here. That pretty much breaks it. There's a gap with high volume that comes back in at about 26. So it doesn't have that much farther down to go when we actually look at the file of this fine company. What do we have out here? Wireless, business enterprise, residential broadband networks worldwide. So I didn't have time to dig through and find out why this one has not done well. Cisco's a little off. There's some deals out here floating around that they're tangential to. But one of the things we did discuss last week was the incredibly light volume test that Cisco had of its August 13th high, $29.21. The 61 million shares that got tested with half that, 32 million shares on October 26th. This thing's been moving back. Not a lot of volume today, but again, I suspect that it's all going to be about the volume at the end of the day. Ericsson, nice little bounce up, and not that much. Now, here's one that I found very interesting, and that is Hertz Global. They had news out today. Certainly looks like this thing is going to rocket back down to its low of August 24th, which is 1485. We got a nice move out here on 20 million shares already today. That's plenty enough to blow through the September 29th low, and we're already into that candle today. So that pretty much opens up the $14.85 line. And of course, anything in this travel area seems to be, especially with the dollar, seems to be incredibly open to pressure, probably for a while. And I didn't go through it, but you got to think that if a lot of people are flying to Florida for Disneyland or something this winter, that maybe, or flying other places, it's got to be problematic when you get this big a move in the dollar index. Copper is less than 3 cents above the 824 lows, which is the lowest level since 2009. Andy's chiming in from the cheap seats here today. What else do we have? Oh, we looked at that. INCY had some decent news about what was going on. This is on the heels of an absolutely huge slaughter fest on Friday. They did get good news on one of their drugs in one of the earliest parts of testing. So it's up a little bit from what it did on Friday. It did not pierce its September 28th low, but had plenty enough volume to do it and was only about $1 higher than that. Look for these stocks once they get bounced a little bit and people get some of their cash back. Look for these to see renewed pressure. The commodity seats, yes, that's where he is. He's sitting in the commode seat. IMAX Laboratory, another one of these, the same kind of thing. Again, some of these are kind of bouncing on not extensive volume, but on a down day, not a bad thing to happen. Let's take a quick look at the IBB, see how it's reacting today. Off a little bit, but like I said, a lot of these stocks that were in this sector today, had some decent news come out. Not, life-changing news, but encouraging news on some of their drugs. But again, IBB has a high volume low that is untested at 285.83. It actually went into the August 24th low with even higher volume. So that pretty much sets this thing up as a bounce. I would have looked at this short at 341, but I think maybe it's got the opportunity to go up there one more time before the end of the year and then reverse. Of course, this week is all going to be about retail stocks, and JCPenney is about as ugly as it gets other than stocks that are literally going out of business. But JCPenney down in front of earnings this week on fairly decent volume. It spiked much lower down to 820, about up to 850 or so. But I don't suspect that any of these companies, other than a short squeeze, are going to do that much better. Juniper was involved in a buyout issue, and that's why this thing is kind of down today. But again, this thing blew away every trading day back to, what is that, the 7th of October here in one day, and did it with volume. That volume is probably pretty, it's literally blown all that away. Let's see if I've got the article on it. Ericsson with Cisco. I think this is mostly the deal with Ericsson and Cisco that puts Juniper out in the. This is sells off after Ericsson signs a participation partnership with rival Cisco, and that's all she wrote. Back down on heavy volume. Other retailers on my list today, of course, are Nordstrom's. And let's take a little longer look at this out here. This thing has gone back in already to its gap. That gap that started this whole run up for the last 2 years happened on May 15th of 2014, 2.8 million shares. We're in that with 2.6 million shares today already. So I think we can probably say that the nice bounce on this thing is over, as long as we can say. Other retail stocks that look pretty horrible and horrific are stocks like Kohl's. Of course, they'll be reporting this week also. Down on heavy volume already. People are pretty much anticipating really horrible news out of them. Other stocks that have broken previous highs and coming back into the trading range, L Brands, I think they report this week also. April 6th, 1.9 million shares at 95.78. This got to 101.11, but the best volume out there was 2.3 million shares when it broke. So just barely more volume than the previous high, and this pretty much come right back down into the trading range. Let me check my email real quick. Okay, see if there's anything else out here. Little Fuse, LFUS, nice news out on it. This one is breaking out and breaking out with significant volume. It's not a huge stock to begin with on volume, but 300,000 shares is pretty much better. You did have 300,000 shares on January 30th of this year, but not a lot of other days with this kind of volume. But again, seeing a lot of these stocks, especially smaller stocks, having some short squeezes and moves. On the last of the hit parade of true stinkers out here this week, of course, is Macy's. This is back into and filling its gap. That gap actually started on the 13th of November of 2013. So we've come back and filled this entire thing out here, and it looks like nobody is safe from online retailers, including Macy's and their wonderful Thanksgiving parade. Maybe there's going to be a little bit less in the bowl this year for Macy employees, but we've got 10 million shares on the downside already, and everybody's just, I think, anticipating a slaughter fest for Christmas, at least in retail. PCL. And now we did have a buyout in the lumber business, which I think kind of very interesting because it looks to me like maybe this business will be pulling back. In fact, is it tomorrow or Wednesday? I think we got a few housing stocks reporting maybe tomorrow morning or maybe Wednesday. I'll try to look that up during the break. But kind of interesting to see people going out there and where I think it's Weyerhaeuser is buying Plum Creek Timber Company, PCL. And of course, it's time to probably buy something when you can buy it with no interest or very little interest, actually. Probably not a bad time before the market pullback. But huge volume. This is not like what we've seen in EMC, where no one believed that deal was going through. In fact, let's check back on that deal a little bit. Well, still nobody believes that Dell is buying EMC for 35 bucks a shot. So guess we'll be good on that. We've got a few stocks here else to look at. Again, you can give me a call at 877-927-6648. Let's take a look at them. This week, of course, we've got a lot of earnings coming out from companies in the residential building business. Been waiting for a few. We've been talking about this stock for a week. It's been hanging around here at these highs. So I think it's going to tell us a lot about how it reacts to the housing numbers over the next couple of days. But the July 23rd high at $77.43. They had 1.9 million shares. Basically kind of spiked into it with half that volume the last few days. It's back into the trading range now. So we'll probably have to look at some other ones. Other stocks hanging out at highs without a lot of volume are Salesforce. Of course, I think this one, what is it, the 18th or 16th? Next week comes out with earnings. CRM has been hanging around at these highs with not a lot of volume. A little pullback today, not too much volume. So I don't think you can make a lot about it. IWM, I think you can. We talked about that earlier in the show. And that is, this thing has probably done everything it should for its bounce out here in this lower trading range, which will take you somewhere around 107 to 118. We're back into that today. Volume is not picking up. My guess is it's going to take a few days, if at all, getting any kind of volume to the downside on these. But the energy was notably different on the way back and around. Red Hat. Kind of interesting to see Red Hat pop nicely back up to these highs, but again, no volume. I think we brought this up Thursday of last week. That's the June 19th high at 81.49 that had 4.6 million shares. It pierced it with half the volume, less than half the volume. It's back in its trading range. The energy that I'm really looking at is this big, long run from April 28th of 2014 up to the high of June 19th, back down here to August 24th and back up to its high here. Kind of looks like there's a good chance that this has come up and run out of juice. Speaking out of juice, Microsoft's bought a couple more security companies. And now they've bought 3 from Israel alone. I think the one over the weekend was from Israel itself. Not really moving the stock a great deal, but kind of hard to see any kind of juice that would move this stock much higher into the end of the year. It might hang out here at the highs, but again, it might come back and fill this gap. So probably don't have a lot of room to the upside, but could get back down to the $49 level, I think, if we continue seeing the kind of weakness that we have been seeing. Other retailers out here, TJ Maxx, this one having a kind of ugly day today too. You know, down volume is, we're not long enough into the day, but volume doesn't look good. And I don't like the pattern of the S&P cash today. Looks like we could probably blow out the lows before the close still out here today, especially watching the premiums on the S&P cash options are really continuing to be rather robust from a very weak morning, telling me that maybe the attitudes of the option market makers are starting to change a bit here as we go into the end of the day, especially if we go down and break. My first, at least from what option market makers were thinking on Friday, they were looking at 1950 as some kind of level that they thought that that would probably be about the low for option expiration week. Maybe that's going to change here. I think maybe a lot of people got fooled by maybe the Treasury and the Fed playing games on Friday, trying to hold this market up, maybe even others. We'll be back in a minute.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
The world outside is hanging on by a very thin, non-GMO, cruelty-free organic hemp thread.
Yes, it is. And of course, the market is also. We're not quite at the lows today, but we're close. We'll continue to keep an eye on this market into the close of this show. 2074, let's call it, and change on the S&P cash, 2.56 billion shares. Volume really hasn't spiked to anything that would say that that's big. But to me, that's what I'm kind of looking at. I suspect that we'll get some kind of volume spike, and that will probably set at least a temporary trading low in this market. But until we see some people get a little scared when the market says boo, I think we could see a continued downside in this market. Just not a lot of stocks giving real good signal, I think, is probably the biggest problems. The dollar index is off 19 cents, which isn't a whole lot. It looked to me like it really wanted to start to run, and probably, I don't know, several of the world bankers are out there moving cash around to keep the dollar from running through 100. My guess is that we'll also see maybe a bounce tomorrow as they hold us back and at least goes up and kisses that 100. Also something that might make a temporary low in this market this week. But of course, don't be surprised to see a washout into Wednesday for options expiration. That is a general pattern in this marketplace, so we could see that. But I don't think we have a lot of reason to think that we're going higher, at least in the next couple of days. Anyway, we're looking at TJ Maxx. Not a lot of volume out here. This has been one of the huge winners in these. But again, a lot of these stocks have come back up to the highs. This one couldn't make it when it really started moving down into the August time frame, into that August 24th low. Things kind of come back up. But people continuing to do it. VLO, a little spike out here. But again, for all you fans of commodities, it's not doing the business, as they say, or my Australian friend who says it's not a Bobby Dazzler, whatever that means. Anyway, the August 13th high, $71.50, 8.9 million shares. And what do we get? The best we could get was 6.6 going into it. So, crude's off a little bit today. I've been wondering if we are going to bust this $43 level on crude. We're certainly around that level. I could see a gap down maybe in the next couple of days, maybe not tomorrow, maybe in the next couple of days. I suspect we're going to blow through the $43 level, and whether it closes back above that level or below it is going to tell us whether or not we're just in this trading range for a little longer, that $43 to $50 level. But everything that I see looks like we're probably going to have some kind of gap down, and that gap down is going to signal what happens to the crude market. Now, maybe that's hand in hand with the dollar index hitting 100 also, but I think we've got a lot of moving pieces on the chessboard here, and we're going to have probably at least a couple more days of real excitement, and of course, a lot of excitement going into the weekend. Wanted to look at one more. We looked at Facebook. I haven't looked at Amazon today. AMZN. Let's take a quick look at that. We've got some of these stocks that are just racing to the moon. Not a whole lot of pullback in this one. Volume is okay, kind of close to where it's at. But you could make some cases out here that we've got a lot of three-gap plays. And those three-gap plays will eventually be filled. So I'm watching for some of these already going into their next earnings cycle. But what else can we say? As always, sell when you can, not when you have to. See you here tomorrow at 2 p.m. as usual. Same bat channel, same bat time. I told you thusly.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.